So good afternoon, everyone. Welcome to HANA's third quarter review. So I'll start off with some summary numbers. We came in with operating profits of around 696, up 90% from last year, but down 8% from the second quarter. So sales revenues up 30%, margins up 3% from 8 to 11, and we generated over 1 billion baht, up 57% from last year. Net profit was 564 million because of hedging. On a quarter-on-quarter basis, sales up marginally 3%, whilst operating profits were down 8%, and I will give you the details later. Our cash and short-term investments dropped 6% from over 9 billion to 8.5 billion as we continue to invest quite aggressively in our expansion. So just a summary for the third quarter. The overall recovery continued from the second quarter. Our assembly and test in the UTIA was hit quite hard by the Delta wave, with at one point up to 25% of our workforce in quarantine. So that was a very difficult time for us. In addition, like many companies, we experienced material shortages that affected the supply chain. And this got worse as the Delta impact particularly was hard in the ASEAN countries where a lot of our suppliers are located. So the impact was mainly for IC, but including a small part for PCBA. And frankly, in the third quarter, we did not see any easing of the global IC shortage. So whilst that didn't help us and we lost opportunity in our PCBA business, it's still very positive for the continuity of the cycle in our OSAT business. The Thai baht during the third quarter weakened, but the strong renminbi had an impact on our China business. Moving on to Lamphun, the individual operation. So we recorded very strong sales, 2.7 billion, up 28% for the year and up 3.3% for the quarter. Continuing strong demand for auto parts, mobile, heart rate monitors, and test and measurement, which actually in the past was still strong, but we had problems with material. That improved. The COVID impact for Lamphun, there was some, but it was very minor, and I would say no real impact. And looking ahead in Q4, I would say that the demand profile looks pretty similar to Q3, but the Thai baht has strengthened slightly, so that might impact operating margins. We just look at sales. You can see that auto sales were still robust, but were continued to be affected by shortages in chips. And it seems now that when we thought that this issue would be overcome by the third quarter, because it already started in the first quarter, surprisingly, a number of car manufacturers have still struggled with their supply chain management. But if you can manage it properly, you do get the rewards, as we can see. The fact of the matter is, more and more chips are going into cars. And I just put a little clip saying, the Ford president saying that they estimate that over the next few years, the number of semiconductors in a car will more than double. Moving on to HANA Jiaxing. Again, strong sales, up 28% year on year and 22% quarter on quarter. We saw improvements from IoT, access control. I would say overall, Jiaxing performed quite well, but was quite badly impacted by supply chain shortages for ICs. And the strength of the RMB, plus 7%, also impacted our margins. So despite the strong top line growth, we kind of didn't really get the benefits at the bottom line. And we think going forward, this issue will still be maintained. It might get a little bit better, but it seems that the shortage continues and looks like it will continue into the new year as well. We were fortunate that we were not impacted for power shortages. We claimed to the government that we are strategically important semiconductor business, and they are leaving us alone. So at least we escaped that. Moving on to UTR, which is our HANA's largest packaging operation. We saw again strong year-on-year sales, 28%, but down 1.6 on the quarter. And that was predominantly because UTR was hit very hard with COVID infections. And as I said earlier, at one point, we had 25% of our workforce out, which is about 1,000 people. And that hit us in terms of volume around 12%. But what we did was we tried to focus on higher margin devices to reduce the overall, operating margin impact, which, I think we managed relatively well. So again, strong demand for automotive, mobile, particularly industrial, as the global economy starts to come back and reinvest. And we see that continuing, at least into the fourth quarter and beyond. New equipment lead times continue to be very stretched, between 6 and 10 months, so very difficult to plan. But we are able to get our customers to agree to long-term loading take-or-pay agreements, which is quite unusual. They don't usually do that, which will benefit us next year, and in some cases going on into 23 as well. So it's a vote of confidence from some large customers that we have. They feel comfortable to sign such an agreement to guarantee volume next year. Material lead times also continue to be stretched. So again, there hasn't been a big change in that situation. We hope it will improve in the first part of next year. We've increased our floor space capacity by renovating some existing buildings, which adds around 25% more floor space. Okay, and equipment that we ordered at the beginning of this year is now coming in because of a long lead time, and that positions us well for the next phase of ramp up in the first quarter of next year. So overall, the outlook remains strong, and we don't see any let up at this point in time in the cycle. And I know everyone is trying to understand at what point will this very strong semiconductor cycle start to drop. And it will happen, I'm sure of it too. But in personal opinion, I don't think it's going to happen until not sooner than at least the first half of next year, probably stretching on beyond that. In terms of vaccinations, because UTR was hard to hit, we're close to 100% now, and the current situation is that we have no infections at this point in time. We test about 300 people every week, random test, and so far we don't see any infections. So the situation is good, but you never know with COVID. Smartphone market, which is our biggest sector, actually shrank, and that was probably because of component shortages. So it's not only the auto business that been affected, but I just managed to get some recent data on October numbers. 5G China sales up 57% month on month and 30% year on year. So I think that really is in relation to supply chain management rather than actual demand. I still think the demand is still pretty strong for 5G. People are replacing their phones as the network spreads out across the globe. But the industry, like the auto industry, is suffering with supply chain issues. Moving on to China IC business, recorded very strong sales, 80% year on year and 10% on the quarter. What we've been doing now is refocusing this operation to focus our attention on the domestic market, because China is really repositioning itself and trying to reduce its dependency on the West. I think you're all aware of this decoupling issue. We've actually invested, placed orders at the beginning of this year to double our capacity for IC packaging and test. And that equipment is starting to come in now, again, about a 1-year lead time. And we'll be in a position by middle of the first quarter to have doubled our capacity. And we feel quite confident that the demand is there. In fact, we may have to further increase again. So that's under discussion. But we really want to make sure that we get this this capacity filled up first before we pull the trigger on the next round. So you can see from this chart how COVID hit Ayuta's output, which is the blue bar. But I think in the fourth quarter we'll see that coming back. So the Q3 global semiconductor numbers came in extremely strong. In fact, it's the biggest quarter on record in terms of units shipped. So up 27% year on year, pretty strong. Moving on to our US operation, we recorded sales up 25% year on year and 30% on the quarter. Our tire tags were up, but slightly down on the quarter, up year on year. We have a new business we introduced at the beginning of this year called inlays. These are basically intelligent barcodes. Okay, chips have become so cheap now that you assemble them onto a flexible printed circuit board, which is like a piece of paper, and then you can put it on a package or a device or anything. And that business is absolutely exploding because it's disposable. So now every single document that's sent by someone like DHL will have one of these devices on it, and you can imagine the volume just on that one customer alone. Unfortunately, like all the other industries, there isn't insufficient supply of ICs again. Were it not for that, our business would have grown significantly further. In fact, what we are planning to do now is to buy a new factory. Currently, we rent the factory we're in. So we're down to a few shortlisted sites where we plan to double the space of the capacity because the inlay business is quite bulky and we see it growing exponentially. And I would say over the course of the next 2 years, provided we can get ICs, our sales in Ohio will double as a result of the growth of inlays. So it's an exciting new product, and we're very happy with the results so far. Cambodia, frankly, still continues to struggle. There is a lot of interest, but because it's a very new location to do microelectronics assembly, potential customers want to come and see. And of course, Cambodia, like Thailand, has been shut down. And Cambodia is still shut down. At least Thailand, you can come in. It's not easy, but you can still come in and not have to have a sort of 2-week quarantine anymore. Whereas Cambodia is still the old criteria. We hope at the beginning of the year things will change and customers can start coming. But at the moment, we're treading water and keeping our costs under control. But it continues to lose money at this point in time, but it's relatively small for the size of the HANA group. Here's a chart for the end applications. Not a huge difference. Telecom at around 29%, auto 17%, industrials and opto, which is sort of similar group, 15 and 10 respectively, and then RFID 9, computer business is a business we're not focusing on. It's had a good run because of the work from home, but we start seeing it going back to its what I would call systemic contraction, and I think by next year we will see year-on-year drops in demand for PCs as people start going back to work again. And medical comes in around 3%. The Thai baht has been good to us until recently. Thailand welcomes back tourists, and maybe that had some impact, although it's just popped up a little bit now. But it got close to 34, which was nice, and then went down to 32. It's been quite volatile. Currently now at around 33.30, 33.20. So we're not sure which way it's going to go. Jay Powell has got a second term at the Fed. I think people are looking at the Fed more than the Thai baht in relation to which way this is going to go. Looking ahead a little bit for the fourth quarter summary. So I would say continuing strong demand for all the same product lines that has been driving our business for the past, throughout this year. Chip shortages continue to cause us problems, and we can't fulfill our potential as a result of that. But I think that's the case for many companies. Overall, the IC demand continues to be very, very strong. And as I said, we managed to now start signing long-term agreements, which has never been the case before. So companies seem confident. To what extent this is because they're repositioning their supply chain with this decoupling issue, or they really believe that their absolute sales will be growing, it's difficult to know. But they're willing to sign, and we have a contractual agreement, so we're happy. Utah will be able to increase its output starting next year with the space that we have now completed. Unfortunately, this was delayed by COVID, but it's not going to have a major impact. The Delta issue for us is now over for now. We don't know, when and if it will come back, but at least it's not going to be a problem as we see it in the fourth quarter. Okay. The strength of renminbi is, however, a drag on our China business. And let's see, winter's approaching in the West, and COVID rates are going up in Europe again, and I don't know to what extent that's going to have an impact on overall global growth. But I think, COVID is not yet over by a long shot, and we need to be very aware that this can come back at some stage. Just quickly on our capex and liquidity overview, so we generated just over 1 billion baht compared to 660 last year. As I mentioned earlier, net cash is down from 9.9 to 8.5 because we are spending now quite substantially. We spent 1.1 billion in the third quarter compared to 200 million a year ago, so significant difference. But that obviously includes our investments in Korea and PMS. And our capex to date is about 3 billion, and our original plan was 2.2 billion. So we're well ahead of that, and that will increase by the end of the year also. So now I'm going to quickly touch on silicon carbide, because this is the future for HANA. We're at the beginning, I believe, of a 10-year plus growth driver, and it's a very exciting project which we believe is going to transform our company. Very, very quickly, and forgive me if some of you may have seen these slides before, but some of you may not. Silicon carbide is a combination of silicon and carbide, and its big feature is its strength, its hardness. Okay, as you can see from the chart here, it's just second to diamond, which is the strongest known sort of material to man. The problem with it has a lot of advantages we'll talk about. The problem is it's very costly to develop and process. And just as a sort of guideline, the cost of a silicon carbide wafer is about 8 times that of a silicon wafer. So you have some very, very good physical properties, and that's why it's needed, but it's expensive. And we believe that the company that we started, and it will be 5 years in January, called PowerMaster Semiconductor, PMS, will change HANA over time, because pretty much every EV car and charger will use silicon carbide inverters. And this is definitely, as you're all aware, a huge growing market. And we're just at the start of this. And our operation in Korea is very well positioned, to play a leading part in the domestic market in Korea, serving those large electronic companies. The whole theme of decoupling and chip nationalism continues to develop and evolve, and it's no different. I mean, you just saw Samsung agreeing to a $17 billion investment in Texas, no doubt heavily influenced by the US government with incentives and political pressure. Korea is looking, China is looking, Europe is looking, all to develop their own supply chain within their borders. We will be the first pure Korean play for silicon carbide, and as a result, we're getting a lot of attention. At the same time, China is looking for a sort of non-Western supply chain, because they, of course, want to be independent. They certainly don't want to rely on the US or Europe. So they are also very interested in a startup company that's below the radar at this point in time. So I just talked about what we call the front end, which is the IC production, but the next phase after that is you have to assemble it. It's called the back end, which is the packaging solution, which is what HANA's core businesses today. Okay, so we already have all the capabilities to assemble the basic devices, but what we haven't done but plan to do is to expand into modules. Okay, so these are the power modules that are needed mostly in EV and charging devices, and this is in itself a huge business. This is an area where we've also invested with some key technical headcount who developed our own module patents, where we believe that our yields may have some breakthrough productivity gains, because, as I mentioned earlier, silicon carbide is very expensive. So not only do you have to pay a lot of attention to the yields as you're making the actual silicon, if you throw away more than you have to when you assemble them into a module or a package, it's the same problem. You're wasting a lot of money. So if we're successful to combine these two increases in productivity, I think we have a very good chance of expanding this business, which is growing exponentially. So we have now, and I'll show you a video shortly, got approval from a number of customers that we have sent samples of the devices that we have so far completed at the beginning of this year. So they range from consumer electronics, white goods, mobile chargers, that's a silicon device, the MOSFET, and of course EV onboard and charging devices as well. I don't think I need to tell you that EV cars is now a reality. It's going to happen, but we are very much at the beginning. I think it's less than 3% of all cars sold today are EV. But over the past 18 months or so, a staggering $330 billion have been committed to the EV revolution and battery technology. And that's a huge number. And the number of vehicles being introduced and announced is literally daily going up. So this is not a hope anymore. This is a reality. So I hesitate to give projections on what PMS will be, but I keep being asked. So we've come up with what we believe is a relatively conservative forecast. I will tell you right now, we don't have hard orders, but we have a lot of interested customers who have tested the products that we've designed so far, and they have given us a clean bill of health and are very excited about bringing PowerMaster into their supply chain. And based on the discussions we're having with them, we've made the decision. We're investing another $65 million on top of the $100 million we've already invested to date to take us to mass production. But do I have a hard PO? The answer is today no, because until we have our equipment and we can give firm delivery dates in volume, I'm talking about, to our customers, you're not going to get those POs. But I'm very confident we will. Okay, we do have already one project, because PowerMaster will also offer its capability on a foundry basis, and so that's ongoing as well. And in terms of gross profit margins, these play into the high 20s, high 30s, in some cases 40s, compared to the low to mid-teens that the EMS business at HANA involves in. So over time, it should be accretive in terms of margin. Some of you may have seen this, but some of you haven't, so forgive me, and I'll show it to you again. Our Okay, and with that, thank you very much, and I open up for a Q&A.